Most traders are only looking at candlesticks, but I'm looking at something completely different. And that's why I'm able to catch moves that they miss every day. In this video, I'm going to break down the exact strategy that I use every day to day trade with, the CVD divergence system. No fluff, no theory just for the sake of theory. Just the strategy, real example, and exactly what I look for before pulling the trigger. I don't trade off vibes. I trade based off what the market is actually doing by looking at order flow. And the CVD, which is the cumulative volume delta, is the best way to see it. So let's get into it. By the way, if you're new, my name is Guala. I've been trading for the past 5 years and I've been trading full time for the past 2 years. I also run DTA, which is Decoding the Algorithm. It's a community that I created for like-minded traders like me, where I trade every day from 9:30 until 12 every morning. I post all of my trade recaps and explain exactly what I was looking at before taking any trades. Before we get into the strategy, let me quickly explain what the CVD is, because if you don't understand this, the rest just won't click. CVD stands for cumulative volume delta. It measures the difference between buying volume and selling volume over time. When price goes up and CVD goes up, buyers are in control. Makes sense, right? But here is where it gets interesting. When price goes up and failing to break lows, but CVD goes down and it's making new lows, that means price is rising on decreasing buy pressure. The move down here has no backing. It's weak. It's a trap. In this form of divergence, that's basically what I trade. And a potential reversal could be coming. But the problem with this is that it's everywhere on the market. I could go on the chart right now and show you like 1,000 divergences. So how do you spot the right ones? And this is what my whole system is for. And if I put it in 3 steps, you basically first need direction, then you need to find your POI, and then look at order flow, which is CVD divergence, to take your entry. And I'm going to take this trade as an example because I actually took this trade and it's the perfect example. Not to cherry pick, but just to show you what it really looks like. So first step is to find direction. Are we bullish or bearish? And how I do that is by using my overnight value area. You want to take your volume profile and place it from 4:30 p.m. until 9:29 the next morning. Or you can just do it like me and use the VWAP, which is more accurate in my opinion. So how I do it is I take my first standard deviation band and just take the 70%, which is what will give me my overnight value area. Now let's just change it to black. And then after the open at 9:30, which is my gray line here, you want to see where are we compared to the overnight value area. Are we above, below, or inside? In this case, we're above it. So that automatically tell me that buyers are willing to pay a higher price. Now, this is not the only thing I look for to see are we bullish or bearish for the day. I need to take a look also at my CVD. And this is where you need to see, is the inventory positive or negative? And if price is above overnight value with CVD above 0, buyers are fully in control. If the market is above overnight value, but the CVD is below 0, which is a negative inventory, something is wrong. You don't want to be looking for longs. You want to wait for the CVD to turn positive. So I went back in time to show y'all a real good example. So like we said, market is above overnight value, CVD is positive. So now we already have the direction for the day. We want to be looking for longs. So step 2 is to find our support zone. And for that, you need to go in your 5-minute time frame. But before you look at anything, one of my rules is you never want to trade the first 15 minutes after open. Never trade the first 15 minutes of action. It's completely gambling in my opinion. Everybody's just rushing to the market and placing dumb position. So you always want to wait for the first 15 minutes to close. Okay, so now it's 9:45. First 15 minutes of action has closed. We're above overnight value with CVD being positive. So how do I pick my zone? I basically place basic support and resistance zone, which you can also call a low value node. It's the same thing. It's just that I'm not using the volume profile to place it. But if I would place my volume profile on the chart right now, you will see that it will give me this exact same zone here. So how I place my zone, you always want to place it from the wicks. So you see we got this support zone here. I want to place it. I want to take all those wicks here. Boom. And boom. So this is my support zone. So now we have direction and we know where we want to buy the market. So all we need to wait for is a retracement on this zone to take our buys. So let's wait for the market to touch our zone. All right, so market is buying, CVD is buying, everything is normal. Now all I'm waiting for is the retracement to my zone. All right, so we're coming back to the zone. What you need to do next is go in your 1-minute time frame. And this is where you would look for CVD divergence to take your entry. And I want you to really pay attention to this part because it's really important. So the market is selling back to the zone, right? And the CVD is also selling. But I want you to pay attention to these lows here. And this is practically the same low as the price, right? And do you see how the CVD is selling aggressively past these lows here? Now let's see if the market is going to be able to make it past these lows. Okay, we can even see some aggressive selling here coming in the market, which is basically telling me like, okay, sellers are trapped. All right, so now we can see that the market came back to the zone here and we rejected that aggressively after trapping sellers here. So after a candle like this, you want to take your entry. All I'm looking for to take my entry, I want to see the market leaving a wick on the zone. I want to see the market not wanting to trade on that zone like this green candle here. So that's what I did. I took my entry right after this candle closed here. So let's take a position. All right, so you want to always target high of the session, never target further than that. And your stop, you always want to place your stop 1 point below the zone. So in this case, my stop was at 64 if I can remember. Now let's just let it play. All right, so we can see some more sellers are getting trapped here. And then boom, that's it. The same pattern happens over and over and over again, almost every day in the market. Simple, easy, and clean. Now let me show y'all another example, but a short this time. So on this day, the market opened inside of overnight value and CVD was already negative. So now all we need to wait for is for price to accept below overnight value. But Guala, how do we know if we're accepting above value area or below overnight value area? You basically need to look at your 15-minute time frame. If a 15-minute candle is opening below overnight value, that means we're having acceptance. If it's opening above overnight value, we're having acceptance above overnight value area high. In this case, we can see that the 1045 candle opened below overnight value area low. So you need to go in your 5-minute time frame and go place your support and resistance zones. So I remember this trade. Actually, I was waiting for this. I was waiting for this zone here, and you always want to place the zone starting from the wicks. So boom, that was the zone I was waiting for. Now let's go into our 1-minute time frame and wait for price to retrace on the zone. Okay, so price made it to the zone and even went higher. So as you can see, everything is normal. Price is buying and CVD is also buying. So no shorts for now. Let's keep it rolling. So this is what caused me to take the trade here. You can see that as we're in the zone, price is buying, right? But if you take a close look at the CVD, look at what we're doing. Price is not following. So this is CVD divergence. So as soon that this candle closed here, I took my entry. So now let's take our entry. So boom, we sold the market. We always want to place the stop above the area, 1 point above the area. So my stop was actually at 66, sorry. And target was all the way down to low of the session, like always. So we got our direction, which is bearish. We got our zone, and now we just spot that the market is buying, but there's no real participation. The movement is fake. So we could potentially have a reversal. Now let's play it. And while the trade is playing, you also want to look at the CVD. Because if CVD break these lows here before price taking low of the session here, that means sellers are getting trapped, like right there. So you either want to close the full position or place your stop break even. And most of the time when the trade is close to my take profit like that, I just take my money. And if I let it play, I think we indeed reversed right after that. We didn't even make it past low of the session. Why? Because sellers got trapped. Let me play it a little fast so we can see. So did we make new lows? We in fact did not make new lows. Why? Because sellers got trapped here, which is also CVD divergence. It's the same concept. See how market failed to break these lows here? But CVD broke them easily. So let's do a recap of the strategy. You first need to find direction. You need to know who's in control of the market, buyers or sellers. So if price is above overnight value, you want CVD to also be positive. If price is below overnight value area, you want CVD to be negative. So step 2 is to find our zone. Let's say that price was bullish for this day. So now you want to place your support zone. And after you find your support zone, which is where you want to take the trade, now you drop to your 1 minute time frame to look at some order flow confirmation, which is our CVD divergence. Then once you spot that, you want to wait for price to reject that zone aggressively with a big candle. Then take your entry and target high or low of the session. That's it. That's the core of what I do every session live with my members. This strategy works because it's not based on lagging indicators. It's based on real market orders, real data. I will actually attach a full checklist for this exact system in the description, so just make sure you go check that out. If this video helped you and you want to go deeper, I just opened some spot for my DTA premium community. I usually keep this section of my Discord really private and low on how many people is in there because I really want to focus on the traders I'm working with so they can get real results. You get to live trade with me every morning. I post detailed trade recaps after every session on what I was looking at in order flow. You also get to ask me any question you want, and you get a full list of videos on everything that I know, going from market auction theory, order flow, imbalance markets, balance market, VWAPs, volume profile, TPOs, because I can't actually cover everything in one video, bro, because there's a lot of stuff that I use to trade with. So I will drop the link in the description for y'all, and also I will drop a full checklist for this exact system in the description, so you make sure you go check that out. So if you actually got something out of this video, just like the video so you can reach out to more traders, and or don't like it to keep it private. You see what you want to do with it. And subscribe if you want more breakdown like this every week. I'll see you next time. Take care.